just about everyone I know is still trapped in some regard in the other system. And a lot of Bitcoiners are still trapped in the other system, and they're measuring price go up. And what they're doing is actually strengthening the derivative instrument of Bitcoin by thinking prices go up and Bitcoin goes up faster than prices. If you just think through that, these two systems are incompatible. The free market is incompatible over a long time with an inflationary-based system because it has to steal more and more, and it has to centralize more and more.
Bitcoin and inflation are two forces often seen in opposition, yet their relationship is crucial in understanding the future of finance. The traditional financial system, fueled by inflationary policies, thrives on centralization, demanding ever-increasing control to maintain its dominance. This system siphons wealth from the many to enrich the few, eroding the broader economy. As Jeff Booth warns, inflation renders the free market unsustainable, forcing an endless cycle of centralization to keep the system afloat. Bitcoin, however, is the polar opposite. Its deflationary design and fixed supply make it immune to manipulation. Unlike traditional currencies, Bitcoin grows stronger with wider adoption, defying the inflationary traps of centralized control. Booth emphasizes that Bitcoin's real power isn't in its skyrocketing price, but in its ability to upend the inflation-driven financial structure entirely. This isn't just a currency war, it's a clash of paradigms. Bitcoin offers an alternative path, one free from the constraints of inflation and centralized oversight. The battle between these two systems isn't just shaping markets. It's reshaping the very fabric of global finance. Booth believes this revolution is the financial tsunami that will change everything. The future is being written, and Bitcoin is at the heart of it all. Watch clips from Jeff Booth's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for tuning in again. Enjoy the video.
Let's start with the US dollar system. For the US dollar system to work, inflation is required. And that inflation extracts more from other nations than it does the US. So those countries have to fail faster. But most people in those countries want the US dollars. A credit-based system has to have inflation because deflation is the natural state of the world. So it has to have inflation to counteract the deflation because deflation would kill the credit-based system. It has to. So it's a mathematical certainty. And then inflation has to keep on rising to be able to pay back the debt. It's just a piece of paper that's worthless. And eventually it has to resolve. Why the US dollar lasts so long is they keep finding tricks to be able to extend its life. First, take it off the gold reserve, and then tie it to energy in the form of oil, right? And now they're likely going to tie it to Bitcoin, and to be able to remove the debt in Bitcoin terms and start the process over. In Bitcoin terms, from people in Bitcoin, as US builds treasury and other nations compete for treasury, denominated in US dollars, that's a centralizing function in Bitcoin, right? They're competing to centralize on a system. From that system, it would appear you could make your debt go away because you're repricing it with Bitcoin as you're buying it. And then from that new stability of a system, you could lever it up again. And most people wouldn't know, and they would be trading in the derivative instrument of because it wouldn't be as bad inflation as it's always been. And so they wouldn't know what's happening. They would think you've resolved the debt problem, and they would start again. In other nations, they would even do it more because they would want the US dollar too. And there'd be a race for US dollars, the derivative instrument on Bitcoin, instead of Bitcoin itself. And so that's a centralizing function. And most people are going to be completely blind to that. In fact, all of the people right now that are trading their Bitcoin for other kind of holding a contract for Bitcoin in somebody else's self-custody, because they think Bitcoin is going up, whether it's in a ETF and everything else, they're doing the same thing. I'm going to get rich in this new system. It's going to reprice the other system. And I'm really thinking in US dollars. And that trick is likely to be successful. And then what would that mean? It would mean you'd resolve the debt crisis, just like you resolved it from going to gold to oil, and you were able to bring it down into a more serviceable area, and it'd all start again. And it's still an extractive-based system. And because most people would live in that system and they would be pricing not in Bitcoin, they wouldn't be spending in Bitcoin, they would be spending in the thing. Then as that centralized, because that system has to be inflationary, as that centralizes more and more, then the attack to Bitcoin comes from there later, a lot later.
Jeff Booth explains that inflation is crucial for the US dollar system to function, enabling the credit-based economy to operate. Inflation allows the US to extract wealth from other nations, destabilizing their economies while making the dollar the most desirable global currency. Despite the negative effects of inflation, the US dollar remains a preferred reserve currency due to its perceived stability compared to weaker currencies. Booth argues that inflation is essential for credit systems, as deflation would collapse them. He speculates that the US might eventually tie the dollar to Bitcoin to manage debt, but this shift would still centralize power, continuing the cycle of inflation and financial centralization. Booth reflects on humanity's historical struggle against inflation and deflation, pointing out how centralized monetary systems have led to financial instability. He believes decentralized technologies like Bitcoin offer hope for a better future, but warns that Bitcoin must remain a peer-to-peer medium of exchange to avoid becoming a tool for centralized control. Let's watch more clips from the interview.
In 5,000 years of human history, we've always known how or many people have always known the secret that we now know, that deflation and how money is controlled against us. Many people throughout timeless, right, understand the risks. And we've never been able to prevent it because of the centralization of that. And that means we must be part of the centralization. We never had the technology to be able to do, but your hope, I have a way higher bar because I don't think people understand the incentive. They make trade-offs for the short-term incentives versus long-term, and they don't understand this. I agree with you, there's more and more people coming down all the time and more people keeping this decentralized and secure. So I'm actually not at all worried about the failure of Bitcoin at all, because and there's more and more people. But the failure of a lot of people on the way through, right? Because they're going to be present, maybe nation states and everything else. They are going to be building from a debt-based system and an inflationary-based system, and all of what that means against a neutral reserve assets that's deflationary. And if Bitcoin, a really simple axiom you could use is if Bitcoin failed as a medium of exchange, it will fail as a store of value. Because if you didn't use it ever, and you just, or you used it to lend against it, and you held it, and you just created the lending environment again, all you have is new kings, and those new kings would eventually be overthrown by a centralized structure. This has to be a medium of exchange. It has to be a peer-to-peer medium of exchange to stop the centralization of that. It will be. It is already. It's building more privacy tools to be able to resist that. So I'm not worried that it won't be, but it has to be used as a medium of exchange. It's a protocol that moves it into Lightning and to be able to transact at high volumes around the world, and then it moves from there into Fedimints and free banking. It's completely private, and so you have a security and decentralized layer. And when fees go to, you could trade on it if you want, or you could trade lots of money on it if you want. And that's very open for people to see. If it was only that, and it was open to people to see, and everybody were trading on this other thing, and not very many people could trade on this, then eventually the government, being that big, because it was would come and find those people and stop that. So it has to move up into liquid Lightning, whether it's an interoperability layer that is on top of that. And for two reasons, it has to move that. Because if you didn't have the interoperability layer on top of that, then people would try to force changes onto the base layer that could protect and misunderstand something that could end it leading up to breaking Bitcoin. Right? It wouldn't harden. They would introduce a change that could produce risk onto Bitcoin from from a base layer change. So you move the interoperability layer up into Lightning and everything else. Now people can trade with it all over the world, and it's more private.
Jeff Booth's perspective on inflation ties directly into the rising value of Bitcoin, particularly as U.S. inflation data suggests a possible interest rate cut by the Federal Reserve. Bitcoin's climb past $100,000 reflects growing optimism about its role in the financial landscape. As Booth explains, inflation plays a crucial role in maintaining the U.S. dollar system, facilitating credit-based economies. However, this inflationary cycle destabilizes other economies while reinforcing the dollar's global dominance. Bitcoin's recent surge echoes the shift Booth anticipates, moving towards decentralized systems as a hedge against inflation and centralized financial control. The surge in Bitcoin's value, aided by U.S. inflation data, aligns with his warnings about the potential of decentralized technologies to offer an alternative to the traditional, inflation-driven financial systems. The increasing popularity of Bitcoin, alongside expectations of further rate cuts by the Fed, is indicative of a broader shift towards cryptocurrencies. However, as Booth emphasizes, Bitcoin's future must avoid becoming another tool for centralization. The cryptocurrency's potential lies in its ability to remain a decentralized, peer-to-peer asset, providing an alternative to inflationary pressures and financial centralization. The market's current optimism around Bitcoin hints at a future where it may act as a neutral, deflationary reserve currency, echoing Booth's hopes for financial reform through decentralized systems. As we wrap up, do you see Bitcoin as a potential solution to the issues caused by inflation and centralized control? Do you believe Bitcoin can remain decentralized and avoid becoming another tool for centralization? Let us know your thoughts in the comments below. Share this video, and don't forget to hit the like button. Thanks for watching, and don't forget to subscribe.